Joining me is Eric Owens, President and CEO of Alexandria Minerals Corporation. Alexandria is a Canadian gold exploration company focused on exploring and developing one of the largest properties in the prolific Val-d'Or, Quebec gold mining district. Alexandria trades in the TSX under the symbol AZX. Eric, appreciate you spending some time with me today.
Well, thank you, Rob. It's a pleasure to be here. Just close to the holiday season, nearing the end of a fairly difficult year and trying year in the mining industry.
Well, you took the words right out of my mouth. There's no real way to sugarcoat this. It's been a disaster. It's been ugly. But what needs to be concentrated on here is with this downdraft in the market. Companies like yours didn't just stop doing things; they advanced their projects and didn't get any credit for them. Some things that I look at, when I'm studying a story, is the management team. So, if you would spend a couple minutes and tell me about yourself and the team that you've assembled there.
Yeah, my background is as an exploration geologist. I bring about 30 years' experience in the mining exploration end of the business. Began my career down in the southwest U.S. in Arizona and California, in fact, working for Newmont back when they were a multi-commodity company before they were a gold-only company. And we worked on one of their first gold deposits outside of the Carlin mine itself. Anyway, so I bring a fair bit of experience in that regard. We have Mary Vorvis, whom you've also met, at least over the phone, and she brings a lot of experience in the networking and relationship building of things. And together with our CFO, Mario Miranda, we form a core of very experienced people in the mining industry, and also very responsible, and we're very focused on what we're trying to do here. In addition to our management team, we have on our board, we have a rather wide, variable group with variable experience on our board, but it would include the likes of Charlie Page, who was the president of Queenston Mines, which just got sold to Cisco about a year ago for about $500 million or so. So we have a lot of experience, a lot of different takes on how we should proceed on things.
Well, so much of a story's success is truly made from location, and I'd say you certainly have the address that should demand attention from investors. Speak to your address in the prolific Val-d'Or, Canada's greatest gold district.
Yeah, correct. Back when I'm a co-founder of Alexandria, of course, and my then partner and myself, we purposely set up in a place like Val-d'Or. Because we knew there was infrastructure there, and it has a long history of mining. In the immediate area around Val-d'Or itself, we've probably seen about 30 or 35 million ounces of gold produced, but in the broader belt that we find ourselves on, the geological belt, that is the Cadillac Break gold belt, probably 75 or 80 million ounces of gold have been mined over the last 100 years or so. So there's been a fair history there, and we recognize that we could produce or discover enough gold. Doesn't have to be a 5 or 10 million ounce deposit to get making money, because there are mills and other infrastructure in place that you can start making money at a much lower amount of gold. But it is also an area where you can find 5 or 10 million ounces. There's a number of deposits that are 5 million ounces or larger along this belt.
Well, speaking of those, let's talk about Akasaba. Let's talk about that project and anything that we might need to know about it. If anyone's not up to speed, certainly on the Alexandria story. Yeah.
Well, Akasaba has been our kind of like a little crown jewel. It lies right in the middle of our rather large property package. We have the 20-mile or 35-kilometer long property package. It's right in the middle of this property package, right along the Cadillac Break, which is the main geological gold-bearing structural feature there, fault zone. And we didn't start on this project when we first acquired this rather large property package. We were doing other work, and about in 2009, just as the markets were starting to go southward, we started drilling on this project, and we have since, over those last 3 years, brought it up to its current status with a resource of over a million ounces of gold now. It's actually 900,000, to be exact. It's 900 and some thousand ounces of gold plus another 300,000 ounces of gold equivalent, which is the copper value in terms of gold. So 1.2 million ounces is what it stands out as gold and gold equivalent.
Well, I know you have two other targets that should be mentioned as well. And what can you highlight for investors about Sleepy and Oronata?
Well, Sleepy is a growing gold deposit as well. We've always managed to contribute a certain portion of our budget on drilling and trying to enlarge that deposit. Officially, the resources there stand at 1.5 million tons at about 3 grams per ton, and that's equivalent to about 150,000 ounces of gold. However, that was from 2009. We've since that period of time drilled below that resource and have added, at least in terms of volume of rock, considerable amount at higher grades, at grades up to 6 or 7 grams over 15 or so meters in drill core width. So at some point in time in 2014, we'll be updating our resource on that. We plan on actually starting up a new drill program early in the new year. It's easier to drill on that project in the height of winter when there's ice all over the place, because you can take the drill rig anywhere you go and there's a fair bit of water kicking around. So we're pretty optimistic about that, about more drilling before we get back around to increasing the resource on that project. The Oronata deposit lies on the western end, very close to the Val-d'Or side of our property package. We have not done any work on that, any drill work on that since about 2009, which is when we issued our resource estimate for that project. The global resource there is about 750,000 ounces at an average grade of 1.38 grams per ton. So a low-grade deposit. Probably in our minds, half of that can be mined at this stage, but there's mills within striking distance that suggest we don't need to ship or we don't need to construct our own mills for that. We have been delineating new drill targets to try and enlarge that, and I think we can see a lot of potential there as well to increase the size of that deposit, to get it to a point where it truly is a viable economic deposit. That'll take a fair bit more drilling, though.
Yeah, I mean, one of my points was going to be obviously any catalysts heading into 2014. I think you kind of just laid that out. Is there anything else that we could look forward to from hearing from you guys early in the year 2014?
Well, Rob, thanks. As we tell people, we are working on a number. We have a lot of hooks in the water, I should say. And as we all know, it's taken a hell of a lot more work to accomplish things this past year than it did in previous years. People are not as ready to commit themselves to one thing or another. I think we've made a lot of progress through this year, and I think that in 2014, I'm quite optimistic, and I'm fairly confident that at least one of these hooks that we've got out there will land a fish. I think certain things are on the docket that I'm fairly confident about at this stage.
Well, in closing, I'd like to get your thoughts on what 2014 will bring in general for gold, silver, and the TSX. Is it going to be a good year? Is it going to be a tough year? I know you're probably prepared for the worst, but hoping for the best, like us all. But what does Eric Owens see?
Yeah, that about sums it up. I mean, I don't have a crystal ball, of course, and I do talk with a lot of people, and I am confident about what's going on with Alexandria. I'm very optimistic about our activities and what's going to happen in 2014. In terms of the general market, I think it's going to be a slow year. It'll slowly start improving. From my own point of view, as a kind of an operator here, we rely on the gold price. The gold price seems to be down and is hinging on the Fed's decisions these days. But, gold miners made money when the gold price was a lot lower than this. I think there was a lag time in terms of costs when the gold price went up. Costs also went up, and I think as the gold price comes down, costs will ultimately come down too. So I'm not terribly concerned about that, and I think good, solid companies like ours will continue to prosper, so to speak.
Eric Owens, President and CEO of Alexandria Minerals, thank you for the update.
Thank you, Rob. Pleasure to be here today.